Farm income may break records this year. Even adjusted for inflation, the numbers are above average.
As Steve White visits with one of the state's top ag economists, uncertainty, though, remains.
Visiting with Brad Lubin, Extension Policy Specialist. Brad, a lot of different things for an ag economist to be thinking about these days. Let's start with a positive thing.
Yeah.
Farm income. What are we looking at?
Farm income's really strong. You know, we had results just published officially from USDA for the 2021 calendar year, and record farm income in Nebraska, built on the strength of good commodity market prices, really good results from 2021. Still quite a bit of additional assistance from the government. 2022, 2023, we worry a little bit about backing off because of concerns of higher prices, but also growing higher input costs and now production challenges here in 2022. So good financials, but enough to focus on tightening margins and challenges in the year ahead.
Yeah, the income side is up, but we also know that input, the cost of raising that crop has definitely gone up. What are we looking at? What are you concerned about, or what dynamics are you kind of watching here?
Well, you know, we look at the prices are higher, but we still have variability. We still have uncertainty. That safety net that we rely on from the federal government underneath prices, that's down at lower levels. So all of this uncertainty is without much of a net. And so producers have to look harder at their own safety net decisions, crop insurance, marketing decisions, etc. And then they have to figure out, but if I manage risk on the output side, how do I manage my risk on the input side? Because fertilizer costs, fuel costs, and interest costs are a substantial part of that bottom line too.
Speaking of policy things, we've got a farm bill that, in talking with our congressional delegation, they would like to get the things moving next year, it sounds like. But we're coming off in an interesting time where between trade and then COVID-related things, we've seen about 4 years of a lot of ad hoc disaster payments that have really propped up farm income. How do some of those dynamics affect as we start to go to the next policy round?
But the question is, you're right, we've seen so much in terms of ad hoc assistance, trade assistance, COVID relief, additional stimulus spending here, to the point that all of that ad hoc assistance has dwarfed the amount of fundamental sort of traditional authorized assistance in the Farm Bill itself. How do you have a Farm Bill debate when the ad hoc stuff has been the bigger budget, but ad hoc assistance doesn't have a permanent baseline? It doesn't have a long-run spending plan. We've spent more on commodity support through ad hoc relief than we have in commodity programs. We're adding substantial dollars for conservation for climate practices. We've put substantial dollars into broadband and renewable energy and bioenergy. The Farm Bill debate just looks different because the budget questions are much more complicated.